Welcome to today's report, the 11th of July 2025. So what's in store for us today? Right, today I'm going to talk about what's behind Bitcoin's latest bullish move, and most importantly, will it last? Bitcoin's historic rally to a new all-time high of 112,000 has stunned markets. Okay, and last night it has even moved higher, much higher, and reignited bullish sentiments across both crypto and traditional finance. Now, this move is driven by a convergence of powerful macro, political, and market technical forces, while the options market positioning suggests further upside potential but acknowledges defined risk boundaries. So, what are the key tailwinds behind Bitcoin's rally? Now, the number one is the relentless ETF inflows and under-positioned traders chasing upside. In the past 3 months, US listed spot Bitcoin ETF has accumulated over 15 billion worth of Bitcoin. As highlighted by Marcus Thielen of 10x Research, these inflows have continued even during consolidation periods, showing resilient institutional demand. Now, this ETF-driven buying has forced many underpositioned traders to chase the market upwards, now evident in the surge in call options demanding at strikes far above current prices, i.e. at the 125K and 133K equivalent levels. Now, other than that, we also have the political pressures on the Fed for aggressive rate cuts. Now, President Trump has amplified calls for the Fed to slash interest rates by 300 basis points, which is 3%, a move that would be unprecedented outside of a recession. Usually only recession we see this kind of moves. Now, in his public remark, Trump argued these could ease America's 1.2 trillion in annual interest payments and stimulate growth. Even though analysts like the Kobeissi letter caution that such drastic cuts would risk reigniting inflation and triggering a sharp decline in the US dollars, potentially exceeding 10%. So the market is reacting to the near-term liquidity boost such cuts could unleash, right? Now, traders began aggressively bidding Bitcoin higher minutes after Trump's social media post on July 9th, calling for urgent cuts. Bitcoin's reputation as a hedge against fiat currency devaluation and beneficiary of looser monetary policy made it a natural recipient of this speculative surge. Next is the historical seasonality and technical breakout confirmation. Now, historically, July is a strong seasonal month for Bitcoin, averaging gains over 7% in 8 of the past 12 years. Now, this seasonality has combined with technical momentum as confirmed by 10x Research proprietary trend model turning bullish on June 29, projecting a 60% probability Bitcoin rise another 20% to 133,000 US dollars by September. Now, traders recognize this breakout as potentially defining the quarter, with analysts like Rec Capital and Matthew Hyland reinforcing the bullish conviction, describing the recent breakout as an end to the downtrend and 2020 all over again. So all this is just, number one, is just opinions of the analysts. And the best is always look into the, overall, the options, for example. They will give hints, whatever all these arguments, are they laid upon foundations or just hype, okay? Hype of traders is just mentioning there, but are they putting the money there? Are they betting it there? So next is one of the best ways actually is to look into the options market. So what the options are signaling and where could Bitcoin go next? Now, to gauge how far this rally might extend, it's crucial to look at traders' positioning in the IBIT option chains. Now, if you're not sure what IBIT is, it's the ETF, the Bitcoin ETF run by the BlackRock, which is the most popular Bitcoin ETF at the moment. Now, from this, when we look at the IBIT option change, it reflects collective market expectations. So I've looked into the various change, and here are the results within the next 1 to 2 weeks. Now, for the July 11 expiry, heavy open interest is clustered around the $60 IBIT strike, which is about 106,000 BTC equivalent, indicating traders expect Bitcoin to stabilize around 105K to 110K immediately. The balanced positioning between puts and call reflect a short-term tug of war, right? This is the 18. Now it's above that already. So we move on to the July 18 expiry. Traders are increasingly positioning for significant upside beyond 112, with the largest concentration of call open interest at the 67 IBIT strike, which is 119,000. So 1 week away from now, you can see that they are pricing in that price could rise beyond. And that's one of the reasons why you saw last night actually price started moving higher, moving into this zone. So from now until July 18, you can expect price to trade around these levels, or between what we're seeing right now, 115, 116, 17, right up to 119K. So put interest remains anchored around 59, which is 105. That's the support area, suggesting traders are protecting against a pullback, but with clear bias towards higher prices by late next week. Okay? Now, let's look on a bit further, mid to late July expiries. Now, open interest reveals a notable concentration of bullish positioning at the 71 IBIT strike price, which is approximately 125K BTC equivalent, where nearly 18,000 call contracts are open, the largest call interest for this expiry. Now, the outsized interest at 71 suggests traders view 125K as an inspirational target by late July, with strong speculative enthusiasm for further upside. Now, for the July 31st expiry, even clearer optimism is reflected here. The biggest open interest concentration is around 70 to 71 IBIT strikes. So basically around 124 to 126,000 BTC US dollars per BTC equivalent, combined with sizable interest at $60 of IBIT, which is 106K, showing traders expect further upside while recognizing 105 as a critical support level. Now, when we come to early August expiry, over here, options activity is lighter and more scattered here, indicating that market participants remain focused on July expiries and upcoming policy catalysts. For example, the July 15 CPI print, that is important to serve as a guideline for the future, as well as US Crypto Week, where there will be 3 bills that is crypto related that we will see whether it's going to pass or not. And these are very bullish bills for the crypto if it passes, right? So question is, will this rally last? The answer depends on whether these tailwinds persist and whether the Fed's response aligns with market expectations. Why might it last? Relentless ETF inflows continue to provide a steady beat. Political pressure on Fed could keep traders positioned for additional monetary easing. Now, historical seasonality remains supportive through July. Strong technical momentum suggests rooms for another 10 to 20% upside, possibly towards 125K to 133K in the coming weeks. Now, what are the risks that could interrupt the rally? The Fed might resist political pressures and delay or limit rate cuts. A hot CPI print on July 15 could dent the narrative that inflation is benign. dampening risk on sentiment. The option market shows significant downside put interest at 105 and 96K BTC levels, suggesting traders expect that range to act as a floor but are prepared for volatility. Okay, so as a conclusion, option markets are as a barometer of sentiment. Now, the combined narratives from the articles, you know, that I've read and the IBIT option change suggests that this Bitcoin rally is fundamentally underpinned by institutional flows, political dynamics, and technical breakouts, and that traders expect upside to continue into the 120K to 130K range. At the same time, option market shows that traders remain cautious and are protecting against sharp corrections, with large put interest between 96 to 105K, suggesting a perceived price floor. Now, in short, the rally could continue in the near term, but will hinge on upcoming macro data and whether the Fed meets market expectations for aggressive easing. Okay, so that's my report for today.